Welcome to the Coin Bureau Weekly News Roundup. My name is Guy.
And my name is Jessica. Here are the top stories in crypto this week.
History is made. The SEC approves 11 spot Bitcoin ETF applications, initially sending BTC's price soaring. But where is the parabolic rally that everyone was expecting?
Blackrock Backs ETH, the world's largest asset manager, pushes for a spot Ethereum ETF, while JP Morgan remains skeptical. When could the spot Ethereum ETFs be approved?
Circle plans IPO. The second largest stablecoin issuer files the paperwork required for its stock to list on regular exchanges. How this could affect the crypto market.
Inflation stays stuck. The CPI print comes in hotter than expected as the PPI comes in cooler than expected. Why this could make or break the markets in the coming months.
And a closer look at last week's top performing cryptos and where they could be headed next.
All this and more in just a moment.
Yes, last week the SEC finally approved all 11 spot Bitcoin ETF applications in a move that's likely to change the crypto market forever. In a subsequent interview, SEC Chairman Gary Gensler confirmed that it was Grayscale's court victory that had cornered the regulator into approving the applications. For context, Grayscale applied to have its GBTC trust converted into a spot Bitcoin ETF. The SEC rejected the application and Grayscale sued. Eventually, Grayscale won and the SEC decided not to appeal. In retrospect, these were the two biggest catalysts that fueled the ETF-driven crypto market rally. Anyhow, the SEC approved all the spot Bitcoin ETF applications on Wednesday, and they all listed on Thursday. The spot ETFs then saw an estimated $4.6 billion in trading volume, but it's still not entirely clear what the total inflows and outflows were. This is due to the delays in reporting. Now, based on the most recent information that we have, it's estimated that these ETFs collectively saw inflows of over $700 million. And for those unfamiliar, these inflows translate to direct buying pressure for BTC, since the asset managers who operate the ETFs must go and buy the BTC to back the new shares. So, this begs the question of why BTC's price didn't go higher. Well, the answer depends on who you ask. Some would argue that BTC's price did go higher relative to its recent levels. Others would argue that the lack of explosivity to the upside was because the spot Bitcoin ETFs had already been priced in. From our perspective, we believe it's possible that BTC's modest rally was due to sell pressure coming from Bitcoin whales. This is based on on-chain data from Whale Alert, which revealed hundreds of millions of dollars of BTC flowing onto exchanges before, during, and after the listings. Assuming this is the case, or at least one of the contributing factors, then it's possible that the spot Bitcoin ETF listings were a sell the news event, at least for some. The bigger question is what happens now that these ETFs have finally been approved. Will the selling continue, or will new buyers come in? Well, the charts suggest that the next week could be choppy. That's because BTC is trading within a range of between 42 and 44K and could continue to trade in this range in the absence of any catalysts that would take it higher or lower. This reflects the overall uncertainty that traders have about BTC. Now, believe it or not, but this could actually be extremely bullish for the crypto market. That's because when BTC trades sideways, altcoins tend to rally. As you can see, the Bitcoin dominance chart, which measures how much of the total crypto market cap is just BTC, seems to have painted a head and shoulders. This could foreshadow a period of a few weeks or more where altcoins outperform BTC. This would be notably consistent with the bear market rally of 2019, wherein BTC also rallied close to all-time highs and then traded sideways for a few weeks while altcoins rallied. Eventually, there was a huge correction. Now, if you're planning on trading BTC or any altcoins, then you need to check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $40,000 on the best crypto exchanges. These deals are available for a limited time only, so take advantage of them now. The link is in the description. Now, speaking of alt season, the spot Bitcoin ETF approvals have finally turned the attention to ETH. That's simply because Ethereum has pending spot ETF applications of its own. This was something that was discussed by Blackrock CEO Larry Fink, and this seems to have been the catalyst for the ETH rally. As you can see, ETH is looking very strong on the daily and could be in the process of painting a bull flag. If it is, then it could take ETH as high as 3K in the coming days. Now this wouldn't be surprising, given that Ethereum has a more immediate catalyst on the menu, the Denkun testnet this Wednesday. You can learn more about Denkun by watching our recent Ethereum update. I digress. Anyways, things look even more bullish for ETH when you value it against BTC. As you can see, ETH has been looking weak against BTC for months. Just last week, however, it seems to have begun a massive reversal that could take ETH much higher against BTC. In practical terms, ETH will outperform the big daddy crypto. This outperformance could last for weeks or even months. This would make sense given that the final decision date for the spot Ethereum ETFs is in May, and the SEC is likely to delay until then. This is because Gary Gensler has been at pains to point out that the decision for the spot Ethereum ETF is, quote, less clear. Classic SEC. Now, megabank JP Morgan reportedly thinks there's only a 50-50 chance that the spot Ethereum ETFs will be approved by May. This is a bit surprising given that Grayscale could take things to court again with its application to convert its ETH trust into a spot Ethereum ETF. It would likely be an easy win. However, it's possible that JP Morgan's skepticism is justified. For starters, there appear to be far fewer Ethereum ETF applications, 7 compared to the 11 for the spot Bitcoin ETFs. This could reflect the perceived lack of demand for such an instrument, or the fact that the SEC's approval is considered less likely. Remember that the futures Ethereum's ETFs were a flop when they listed. Anywho, another sign that JP Morgan isn't just spreading FUD is the fact that Gary has not so subtly referred to ETH as a security on many occasions, though he's never clarified his position. Again, classic SEC. To refresh your memory, Gary said that proof-of-stake cryptos could be securities on the same day as the Ethereum merge back in September 2022. The SEC subsequently noted staking yields as one of the reasons why it considers certain altcoins to be securities in its lawsuits against Coinbase and Binance. More about those in the description. Moving on. Now, here is where things get interesting. When you look at the reasoning that JP Morgan itself provided for why the spot Ethereum ETFs may not be approved, they specifically stated that it's because the SEC needs to come out and declare ETH is not a security, the same way it did for BTC. It's safe to say that this isn't going to happen so long as Gary's around. In fact, it's quite possible that the SEC is considering doing the opposite, coming out and alleging ETH is a security, possibly with a lawsuit. This would explain why it hasn't referred to ETH as a security in any of its other related lawsuits. And by the way, if you're enjoying the video so far, be sure to smash that like button to give it a boost. On that note, I'll quickly remind you all that the SEC does in fact think that some stablecoins are securities, so going after ETH wouldn't be completely beyond the realms of possibility. Case in point, the SEC is reportedly probing PayPal over its PYUSD stablecoin. This is why it's fascinating that USDC issuer Circle has filed for an IPO. The reason this is fascinating is because this filing is sent to the SEC, which, as you just learned, literally thinks that stablecoins are securities. So, Circle filing for an IPO therefore suggests that it truly believes that it can somehow pass the SEC's scrutiny. Now, if this situation sounds familiar, that's because Circle had planned to go public via a special purpose acquisition company, or SPAC, in 2021, which would have seen Circle shares essentially swapped out with the shares of a company that's already listed. It's a sort of loophole to getting listed on US exchanges, and one which has been heavily criticised and scrutinised, I might add. This makes Circle's decision to go the traditional IPO route much more significant. In between 90 and 150 days' time, we'll know if it's succeeded. If it does, then Circle could potentially become one of the most valuable companies in the world. This requires a bit of explanation, so bear with me. Governments around the world are massively in debt, and many of them are issuing new debt in the form of bonds to pay back the old debt, sometimes just the interest. In the case of countries like the United States, it's reportedly becoming harder and harder to find large buyers for all these newly issued bonds. If you watched our video about stablecoin market caps, you'll know that most stablecoins in circulation are actually backed by government bonds, specifically US government bonds. This is because bonds are very liquid, easy to trade in large amounts, and they earn a yield for these stablecoin issuers. To put things into perspective, Tether's USDT has a market cap of almost $100 billion. Given that most of this USDT is backed by bonds, Tether is earning billions of dollars in what is effectively passive income. According to its Q2 financials from last year, it had $1 billion in profit after expenses. Now, obviously, this makes stablecoin issuers like Tether the kind of bond buyers that the US government is looking for. The same is true for all governments, for that matter. Now that interest rates are in positive territory, there's an incentive to make stablecoins for most national currencies. If you watched our video about the EU's upcoming crypto regulations, you'll know that the bloc actually banned US dollar stablecoins. This basically forces stablecoin issuers like Circle to issue more euro stablecoins, which in turn means that the EU governments can fund their massive debts. The irony in all of this is that it's us, the crypto holders, who are ultimately subsidizing this spending by buying stablecoins. Now, once governments realize just how much stablecoins can subsidize their spending, it's likely that we'll see stablecoin payments become permitted and even promoted. The result would be that the average person could end up unknowingly subsidizing their government spending via the stablecoins they're using for day-to-day payments. And since Circle is more heavily regulated than Tether, it's likely that it will be given preference in this stablecoin race by the powers that be. And this is why Circle could become one of the world's most valuable companies. It will be the one issuing all these stablecoins and making passive income off their reserves, which are, by the way, managed by Blackrock. This could set the stage for a global synthetic CBDC system that the World Economic Forum has been talking about. More about that in the description too. Anyhow, on the topic of interest rates, some of you will know that inflation figures have a huge influence on them. That's because inflation figures influence how central banks will react, with higher inflation meaning higher interest rates, and vice versa. Investors price this information in immediately. That's why the higher-than-expected US CPI for December caused interest rates to spike last week. They also caused the US dollar to spike, because higher interest rates result in a stronger dollar. Less than 24 hours later, however, interest rates and the US dollar experienced a sharp decline. This was presumably because the PPI for December was released the following day, and it came in lower than expected. Now, for those unfamiliar, the Producer Price Index, or PPI, measures inflation for producers, think manufacturers and such. It's generally believed that PPI leads the CPI by a few months. It stands to reason then that investors saw a lower than expected PPI as a sign that the higher than expected CPI from the day before probably won't become a new trend. This, though, fundamentally depends on inflation in the shelter component of the CPI, which is keeping it above the Fed's 2% target. Anyway, technicalities aside, the key takeaway is that inflation still appears to be coming down. This means that the Federal Reserve is still likely to lower interest rates, which means that borrowing is still likely to become easier. And as borrowing picks up, we'll start to see the economy and the stock market start to grow. Again, this is all being priced in by investors already, which is why these inflation prints are so pivotal. They inform the Fed's decisions at their next meetings at the end of January and particularly in March, when the first rate cut is expected to occur. And the Fed will provide updated rate cut forecasts. So long as the CPI and PPI continue to come in lower, the markets should continue to rally, particularly small-cap stocks and altcoins. However, if we start to see significant weakness in employment-related data, this could signal an upcoming recession, which could have a drag on risk assets. Then again, risk assets could rally on the prospect of a recession, as it would mean more stimulus. This just underscores the fact that the markets have become completely decoupled from the fundamentals of the economy. Fortunately, or maybe unfortunately, many macro analysts believe that the fundamentals will come back to the fore this year, specifically in the spring. That's because publicly traded companies will reportedly need to refinance over $100 billion worth of debt in the coming months, with much of this debt coming due in the spring. As pointed out by former Fed insider Danielle DiMartino Booth, this refinancing has historically happened after the Fed cut rates. This time around, however, this refinancing could come before the Fed's rate cut. And this could put it behind the curve on the upcoming economic slowdown, the same way it was behind the curve on inflation. Seeing as the Fed is fearful of a second wave of inflation, it may not rush to cut at all. Now, the silver lining is that any turbulence in the markets would present another buying opportunity for those who feel they missed out on the rally we've seen so far. As is often the case, though, the urge to buy isn't as strong when the markets are bleeding red. I guess nobody likes discounts. Anyway, with all that said, it's about time we looked at last week's top-performing cryptos. Jessica, take it away.
Thanks, Guy. Well, last week's top-performing cryptos were Ethereum Name Service, SUI, Ethereum Classic, Bonk, and Helium. Starting with Ethereum Name Service, its ENS token appears to have pumped because Ethereum creator Vitalik Buterin praised the project, noting that it is, and I quote, super important. So FYI, the Ethereum Name Service allows you to purchase human-readable names for your Ethereum wallets. Now, as you can see, ENS's rally has been nothing short of parabolic. While it faces quite a bit of resistance around these levels, it could break above them if we see the altcoin season that Guy was talking about earlier. If it does, then ENS could eventually see some significant gains from its currently overextended levels. Next up, we have SUI, whose SUI coin appears to have pumped due to a surge in DeFi activity on the so-called Solana Killers blockchain. The total value locked on SUI has surged past 300 million in just the last few days, driven primarily by lending, borrowing, and trading protocols. Now, as you can see, SUI is trading close to the price that it listed at on most exchanges when it launched early last year. If it keeps rallying, then it could set new all-time highs in the coming days. Note that we do have a SUI review here on the channel if you want to learn more about this crypto project. Now, as for Ethereum Classic, its ETC coin rallied for unspecified reasons. The fact that almost 50% of its traded volume is currently coming from South Korean crypto exchanges suggests that it's related to a bout of Ethereum FOMO stemming from the region. Now, as you can see, although ETC is breaking out to the upside, it faces a lot of resistance on the way up. Even so, it could rally by as much as 50% in the coming weeks due to speculation around the spot Ethereum ETF. It could, theoretically, open up the door for an ETC ETF as well, if there is interest for it. Now, when it comes to Bonk, its Bonk token appears to have pumped due to the launch of Scooper, a dApp that will automatically convert all unwanted assets in your Solana wallet into Bonk. This is similar to the function that you have on most exchanges to convert dust into exchange tokens. So it seems that quite a bit of poop was indeed scooped, because Bonk has rallied sharply in recent days. Now, zooming out reveals that the meme coin could have further to run, though it's impossible to know for sure. Meme coins are extremely volatile, as I'm sure most of you would have noticed. Finally, we have Helium, whose HNT token appears to have pumped due to the ongoing hype around decentralized physical infrastructure, or DePIN, a fairly new crypto niche. Many believe that Helium is the top DeFi project due to its partnership with T-Mobile. DYOR on that one. Now, as you can see, HNT looks eerily similar to Bonk. And by that, I mean that it looks like it could go much higher. And in this case, there's enough of a narrative to make it happen. HNT could have a sizable rally in the coming days as a result, with the next zone of resistance being up to $11 and $12. So if you want to keep track of the top performing cryptos and also where you can trade them, check out the Coin Bureau Insider Telegram channel. The link will be in the description.
And that's all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, then you know what to do. Hit that like button, subscribe button, and bell icon too.
Don't forget to check out our deals page, where we have massive discounts and airdrop bonuses of up to $40,000 on some of the best exchanges, only for the viewers of this channel.
Also, if you want to pick up some snazzy crypto merch, the Coin Bureau merch store has it all.
You can find the link to that resource and many others in the description below.
Thank you so much for watching, and we'll see you in next week's episode.